Good afternoon, boss. Good afternoon, boss. How are you doing today? I'm doing great. Good to see you, Carlos. How you doing? How you been? It's good to be back. Hi, Miles. Hope your weekend was great. It was great, Artistic. How was your weekend? Hoping it went great as well. Hello, Miles. It's been a while since I've made it to the live. I've always been away in Dubai. How's you and CMF? T, I'm doing great. And CMF is also doing great as well. Good on your trips, though. Pablo, good to see you as well. How you doing? How you been? JP, happy Monday, Miles and CMF. Let's go, JP. How you doing? Good to see you as well. Good evening, Miles. I hope you're well. I had a great weekend, mate. And hi to all the CMF. Adi, good to see you as well. How you doing? How you been? Good to see you as well. Hi, Miles and CMF. Dennis, good to see you as well. How you doing? How you been? Pure, good to see you as well. Evening, how you doing? How you been? How's everyone doing today? Okay. Everyone's weekend was brilliant. And there's been a mixture of news to go through on tonight's live. A lot of things have been happening around the world in terms of regulations, policies, and geopolitical situations that have weighed in on the market space. Yet the market space in general, the crypto market space, has been standing quite well for itself, to be fairly honest. Now, let's go through the intro disclaimer about that. Everyone's tuning in for the first part of the live, and we'll go through what we're going to be talking about tonight's live as well. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. I'm hosting live. They're watching right now. This is episode 298 of the CMF Live, and in this live, I always talk about what's happening around the world in terms of cryptocurrency, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As in this live as well, which means if you do have any questions, put it down inside the comment section. More than happy to answer any questions you may have. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. Now, we have a lot of things to essentially go through on tonight's live regarding the market space, regarding how the stock market is affecting crypto market space, regarding tariffs, regarding policies, regarding regulations, regarding the amount of institutions that are actually entering the crypto space in different types of ways. And before we go through any of those news topics, and the first one we are going to be covering is regarding the US essentially stock market climbing, Bitcoin holding gains quite steadily, Trump essentially softening those tariffs, especially regarding those electronic parts that are coming out of China. That's all having positive outcomes essentially on the market space. But before we go through any of those news topics, let's go to the comment section first, and then we go straight into the first news. So let's see where we're at inside the comment section. We were at here. Hey Miles, hope you're well. Yama, good to see you. How you doing? I'm doing great. Good evening, Miles and CMF. Callie, good to see you. How you doing? How you been? Morning, Miles and CMF. Hope you enjoyed your weekend, Miles. I did. Good to see you as well, Shelly. How you doing? Hope you enjoyed your weekend as well. Seems like we're never going to take off to bull run. What's going on? T, we're going to take off. Don't worry. Bull run essentially is in progress. Evening, Miles and CMF. Manny, good to see you. How you doing? How you been? Good evening, Miles and CMF. Free Fabric, good to see you. How you doing? How you been? Regarding the bull run situation, we are going to be, the bull run you could say is pretty much as brewing up is what you can say. It's because they're trying to build a strong foundation for this next run. Because the next run we're going to have inside the crypto space isn't going to be your typical run. It's going to be an institutional run. It's going to be a regulated run. So obviously they have to lay in the foundation before any of that happens. And once we have that strong foundation for the crypto space, which is in progress, I mean, everybody's talking about in terms of regulations. Congress is talking about it. Senators are talking about it. The White House is talking about the crypto space. SEC, CFTC, all these governmental bodies are talking about the crypto space, trying to establish some sort of rules and regulations to build that strong foundation for the United States to be able to move forward into this, becoming the capital of cryptocurrencies, because they do have to compete with other countries around the world who are very advanced in terms of regulations. I mean, the EU is very advanced in terms of regulations because they're MICA. And we also have essentially Dubai, regarding their VARA. They're actually very advanced as well. There's a lot of the countries that are quite a bit advanced. But America is trying to build that strong foundation because the next run we're going to have inside the crypto space, it's not your typical run. It's an institutional run, which is going to be a regulated run. So that foundation needs to be there for that to happen. And it's happening this year, essentially. Now, on the topics of the market space in general, the first news topic we're going to discuss on tonight's live is regarding this: the US stock market climbing, Bitcoin holding gains steady, and Trump softening some tariff stance. So quite a few things have happened, which we're going to go right now into them right now. So major US stock indices ended essentially Monday in a positive territory, which is great for the crypto space as well. While Bitcoin reclaimed the past essentially $85,000 level and is now up 7% over the past week. Investor sentiment improved after President Donald Trump announced exemptions on smartphones and computer chips and other components for these tariff situations that are going on. Apple shares gained after analysts essentially at key blank capital markets upgraded their stocks from underweight to essentially to sector weight, citing optimism tied to tariff exemptions as well. The research firms noted that the worst case scenario for tariff scenarios is off the table, at least for now. And essentially, they said, we've taken some dry powder and put it in the work last week, said essentially Robinhood Stephanie on CNBC. She also went on to say, but we also haven't fully removed it because we think diversification is important, not only away from the dollar, but also just being essentially cautious and balancing between low volatility stocks and growth stocks. There's also a put in now type of position. I think it's being confirmed, and that's actually really helpful, she said. Major US stock indices ended Monday in positive territory, and investor sentiment terms of essentially have improved after Donald Trump announced the exemptions on smartphones and computer chips and so on. And regarding the Apple shares doing quite well for themselves. And also regarding the market situation, one thing has, you could say, maybe impacted the crypto space, but it really didn't, was the OM situation. So essentially, the Bitcoin trading above 85,000 essentially several times during the day, but failed to break higher, still at 84,000 essentially roughly levels, showed strong support. Notably, the broader crypto market remained resilient, with investors largely unfazed by the whole OM situation. So the crypto project with the ticker OM collapsing essentially 90% as liquidations, while some investors blame insider selling and fraud to blame. The recent 90% collapse of the crypto project with the ticker name OM has triggered market-wide shockwaves, leading to enormous fears and speculations. Following that, based on the on-chain reports, essentially the founder of the well-known essentially crypto exchange has called for a full-fledged investigation into the OM crash. So if you're somebody that's holding the crypto project OM, OKX exchange is actually voting for that to happen, regarding the founder of OM to be investigated. The new market essentially data reveals that before the abrupt collapse of OM, up to 17 wallets reportedly deposited a massive $43.6 million of OM tokens. Especially, they transferred up to $227 million in respect to the crypto exchanges. Interestingly, a couple of these wallets are reportedly associated with Laser Digital, a strict Montreal investor essentially account or a wallet, you could say. Due to this, the OKX CEO, Star Zhu, has indicted that the need for a through-on-through investigation to the collapse of OM, because it is quite bad image for the crypto space. The OM token reportedly crashed in essentially low liquidity period on Sunday. Hence, the token plunged more than essentially 90%. The coin touched the lowest of the night, essentially at 37 cents. After that, at the moment, the price of the token stands at essentially 78 cents. This essentially designates a decrease of 87.55% over the past 24 hours. Similarly, the 7-day price performance of OM indicates a 86.95% dip. Moreover, OM essentially 30-day price performance highlights a 87.96% slump. The massive OM collapse led to the community members to question this abrupt development. Keeping this essentially in view, JP Mullen, the essentially OM CEO, took to X to notify the rumors concerning a rug pull. He mentioned that the OM tokens of Montreal's team members are untouched and none of them is being essentially going anywhere in sort of way. He also assured that the online visibility of the wallets addresses along with sharing the exclusive token reports. However, in line with the on-chain statistics, there are many essentially scenarios and rumors going on regarding OM. Thus, the OKX exchange CEO essentially has expressed a requirement for the comprehensive investigation into this matter. In the meantime, the market onlookers and essentially investors will keep a keen eye on price changes for OM token. If you're somebody that is holding essentially OM, it's looking like a bad day for you. But I did tell everybody a while ago when I was asked on this live, what do I think about this OM token? I said it's not worth looking into. You're better off sticking to XRP, XLM, XDC, HBRO, and so on. It's not really worth looking into. Turns out I was right. It's definitely not worth looking into. But that OM token could have caused a massive shockwave collapse inside the crypto space, the same way Luna did in some sort of a way, but it didn't. And that's a good sign for the crypto space. It shows that the crypto space is becoming more resilient than it was in the past. because when we had that lunar crash, the crypto space was not standing strong with that lunar crash, but it is standing strong with this OM crash. Now, obviously, OM wouldn't have the major impact that lunar had, but it could still send shockwaves inside the crypto space, and it didn't. And that's a good sign for the crypto space. It means that the investors inside the crypto space market are not as, essentially, you could say, weak or panicky as they were before inside the crypto space. These are all good signs for the crypto space. Even though OM essentially crashed, it shows resilience inside the crypto space, to be fairly honest. There's always a positive out of every negative. Now, the Fed is what we're going to talk about next. A Fed member, Waller, shares essentially two scenarios for the US economy. One, essentially with faster rate cuts, and the other with the possibility of holding rate cuts steady. Obviously, we want rate cuts inside the crypto space. With the amount of pressure that Donald Trump is putting on essentially the Fed to do rate cuts regarding tariff scenarios, we want them to happen. Donald Trump wants them to happen. The Biden, essentially the Trump administration wants essentially rate cuts to happen. So there are essentially right now two scenarios on this table. And Nick, essentially the Fed member, who said he experienced the economic reports of the Wall Street Journal, nicknamed the Fed spokesperson, shared the latest statements by Fed board member Chris Waller with the public. Waller's statements indicate that he has more essentially dovish stance than the general disclosure within the Fed. Waller considered two different scenarios, essentially in the context of current economic conditions and the potential impacts of trade tariffs, in particular, higher taxes, essentially scenarios, and lower tax scenarios, he said. According to Waller, if the average 25% tariffs remain in place, this could cause a core PCE inflation to rise to 4 to 5% in 2025. However, Waller essentially also argues that this effect will be temporary and that the Fed can look past this such temporary inflation pressures, citing essentially the continuation of the tight monetary policy stance, stable inflation expectations, and the significant essential slowdowns in the economy that is putting the pressure on prices. Waller also stated that in this scenario, the Fed could cut interest rates earlier and more rapidly than expected if necessary, and said when the economy is slowing down rapidly, even if inflation remains above 2%, the risk of a recession outweighs the risk of a short-term increase in inflation. Referring to the policy mistakes back in 2021-2022 period, where Waller said it would not be right to completely ignore similar analysis just because things did not go as expected, essentially in that period of time. Waller, who stated that in this case of a more moderate trade policy, that this is essentially if only the basic 10% tariffs were maintained and the other essentially were removed, the increase in inflation would be much more limited, in which essentially in which a case the peak of an inflation rate would remain at around 3% on that annual basis. He also stated that in this scenario, inflation effects could emerge more slowly, but could also be longer lasting. In this context, Waller also said that the Fed's interest rate cut pressure may decrease and the monetary policy response may remain limited, and noted that if there is more evidence in the inflation is moving towards the 2% target, the second half of the year interest rate cuts may be on the agenda again. So it seems like a perspective essentially coming out of the Fed themselves, and Chris Waller being a board Fed member, saying that, essentially rate cuts are on the table. They weren't pretty much on the table beforehand. The Fed wanted to only do one rate cut this year. They weren't even sure when they were going to do it this year. But it seems like the suggestion of a rapid interest rate cut from the Fed is actually on the table now. So it seems like Donald Trump's plan is working to make the Fed do rate cuts. According essentially to analysis, Waller's statements show that he has a more flexible approach than the low inflation determination line that essentially dominates the Fed, while most essentially other members adapt a more hawkish stance in order to keep inflation expectations under control. Waller sees the risk of an economic slowdown as a more pressing threat than any other. This is great news regarding what's coming out of the Fed. It is coming from a Fed board member, not more sense from Jerome Powell himself, but it is coming from a Fed board member that finally a rapid essentially rate cut is on the table of the Fed. It is something that they might decide to do, which that rapid rate cut could actually boost the crypto space if no bad news is circulating regarding crypto space at that particular time when they do decide to do a rate cut, which is brilliant. Honestly, amazing news. The best news we could have hoped for coming out of the Fed, that a rapid rate cut is actually on the table for the first time ever. that the Fed is actually discussing that scenario. Now, regarding essentially Anchorage, who is a crypto bank, is what we're going to talk about next. But before we talk about that, let's go inside the comment section first. As I said previously, this is live as always, which means if you do have any questions or statements to make, put them down inside the comment section. More than happy to answer anyone's questions. So let's go inside the comment section first. Before we talk about the crypto bank news, let's see what's happening inside the comment section first. Let's see where we were at. We were at here. So we are at Pure's question. Pure's question is, what do you suspect happened with OM Coin's rug pull? Don't have this in my portfolio, but it's not a meme coin. So what do you think happened? Cheers. And what do I think happened with this OM crypto project? Essentially, OM was listed on quite a lot of exchanges, a tremendous amount of, genuine exchanges like Binance and so on, OKX exchange and so on. So it's odd to see it as some sort of a meme coin or a rug pull, but you never know. Inside the crypto space, there are essentially corrupt characters inside the crypto space. However, we can't confirm it's a rug pull until rug pull is on the table for essentially the token OM, the ticker OM. Rug pull is on the table, but we also have to consider the fact that maybe, just maybe, OM was compromised in some sort of a way, and that the founder of OM is trying to mask this situation by not mentioning that OM was compromised in any sort of a way, because that would cause more of a panic for the crypto project, essentially OM. So maybe OM was compromised, maybe it was hacked, and that the founder just doesn't want to be honest with people, or actually it was just a genuine rug pull from the team itself that created OM. So it could go both scenarios right now, because the founder of OM is pretending that nothing major has happened, even though the token is down 90% all of a sudden. And a lot of people lost a tremendous amount of money. This brings me back to essentially the Luna times, when people lost a tremendous amount of money on Luna. A lot of people lost, 5 million, 10 million, 20 million. Some people lost 100 million essentially on Luna. And a lot of people couldn't take that. And then they ended up essentially doing something where there was no return at that moment in time, and it had massive shockwaves were sent throughout the crypto space regarding that Luna situation. But fast forward to this OM situation, it is nice to see that the crypto space is being resilient to scenarios like this, where a token essentially drops 90%, and it's not a meme coin, it's a genuine crypto project that dropped 90%, and the crypto space is still standing strong. It wasn't the same scenario that happened with Luna didn't happen with OM. And I get the point where Luna and OM are not on the same category as where Luna was standing, essentially when it collapsed and so on. But it's still nice to see the crypto space is standing resilient. And the scenario of what could have possibly happened, rug pull or not, rug pull is on the table, but also compromisation is on the table as well. And maybe they're just trying to hide that scenario. Greetings, Miles, the CMF. Happy Monday. Let's go, Ray. Good to see you. How you doing? How you been? Pierce, even Miles, the CMF, good to see you. How you doing? How you been? Yama, Miles, didn't Trump wrote on his social that the tariff exemptions, i.e. smartphone exemption, is fake news? I heard about that, but there are news channels saying that he did say it. Lol, you've answered my question of first item, so don't worry. Okay. Stormy, good to see you. How you doing? Hi, Miles, the CMF. Even Miles, Lee Robinson, good to see you. How you doing? How you been? Hi, Miles. When you think we will see regulations and XRP, XDC, XLM adoption? When we will see XRP, XDC, and XLM adoption happening? After regulations. We need to have regulations in the United States for these tokens to be able to flourish and do well for themselves. We even had a New York judge send a letter to senators to essentially tell them to hurry up in terms of regulations for New York, especially because Wall Street is, standing on the sidelines waiting to jump inside the crypto space, because even Wall Street wants to diversify their portfolios. It's pretty much number one rule when it comes to trading. And in terms of, those crypto projects doing a complete 180 and going skyrocketing up, and the regulations need to be there. And regulations are happening this year. We're getting a tremendous amount of work done in terms of regulations coming out of the White House, coming out of the SEC, the CFTC, and essentially senators themselves. They're trying to first pass the Stablecoin Act, which is the Genius Act they're trying to pass, and some of the rules and regulations alongside that they're trying to pass right now. And Paul Atkins obviously coming in very soon as the SEC chairman is going to help push that even further, because he said his number one role inside the crypto space is going to essentially bring clarity for the crypto space, which in other words means regulation, and institutions know what to do, what not to do, what lines to not to cross, and what gray areas they shouldn't be operating in. So we're not that far off in terms of regulations for XRP, XLM, XDC, and so on in terms of adoption. But the regulations that comes through is going to benefit those three projects and quite a lot of other crypto projects as well, to be fairly honest. Now, Anchorage, crypto bank, essentially. A crypto bank has now, an investigation has been started inside of a crypto bank, which again could have sent shockwaves for the crypto space. But again, the crypto space is standing strong. These are all positive signs that the crypto space is maturing, you could say. It's being resilient to these types of new scenarios. So a crypto bank is right now being federally essentially investigated for financial crimes right now. So Anchorage Digital, a federally chartered crypto bank, is under investigation by the U.S. Department of Homeland Security for potential financial crimes. This probe essentially places one of the most high-profile institutions in digital asset space under the intense regulatory scrutiny of Homeland Security. While details remain limited, the investigation is believed to center a possible violation of anti-money laundering essentially scenarios, and that the Bank Secrecy Act. These laws are critical for identifying and preventing essentially illicit activities like money laundering, fraud, and financing illicit activities. Anchorage has essentially long marketed itself as a compliant crypto institution, becoming the first bank to receive a federal charter in 2021. However, this investigation signals that even regulated crypto entities are not beyond suspicion in today's heightened enforcement environment. The Anchorage probe reflects a broader trend of increasing essentially regulatory focus on crypto sectors. Following the collapse of several major crypto firms, U.S. authorities are intensifying efforts to ensure digital asset companies operate transparently and within the law. Anchorage has not been accused of any wrongdoing yet because they're looking into their files. The bank has stated that it is cooperating fully with the investigations that Homeland Security is trying to do in their bank, which remains ongoing. Still, this development raises questions, some serious questions, about the robustness of compliance programs across the crypto banking industry. And this probe could become a pivotal moment for the crypto industry. If violations are uncovered, it may essentially set a precedent for how digital asset banks are monitored and held accountable in the United States. Investors and users may also become more cautious, seeking clearer proof of compliance from platforms that are essentially safeguarding their assets. As regulatory frameworks tighten, all eyes will be on Anchorage, and what it means for this case essentially is for the future of crypto banking. But again, one of the first crypto banks ever inside the United States is right now being investigated by Homeland Security. This in the past would have essentially sent shockwaves throughout the crypto space, disrupted the crypto space in general, but it hasn't. The news dropped today regarding Anchorage Bank being investigated for fraud, money laundering, illicit activities. It's a crypto bank. And for, the crypto space is remaining resilient to this type of news, the same way they remain resilient to the OM ticker essentially scenario as well. These are good things to see inside the crypto space. It does show that crypto space is maturing. However, if this bank is found to have some sort of fraud or being funding illicit activities, then we'll see if it's still going to essentially the crypto space is going to still remain resilient, or is it going to send shockwaves through it? If it doesn't send shockwaves for the crypto space, that's brilliant because it does show we are maturing a lot more at a much more faster rate. If it does send shockwaves, that's not going to be good, but it wouldn't last more than 24 to 36 hours. Now, Bitcoin mining is what we're going to talk about next. It's been a while since we've talked about Bitcoin mining. And the only reason I'm bringing it up, because the Greenpeace party, you could say, the people that say the world is heating up and that the world needs saving, essentially from fossil fuels or anything else to do with this scenario of, the humans are destroying this planet. Something interesting, you could say, came up, which is that Bitcoin mining is poison. That's the new study that's came out right now. So Bitcoin mining fuels air pollution crisis and legal challenges in the US. So a new study in the journal Nature Communications has found that mining Bitcoin results essentially in large amounts of harmful air pollutants. and small particles produced by power plants. Between August 2022 and July 2023, about 1.9 million Americans were exposed to pollution due to mining, Bitcoin mining, in fact, as harmful substances spread quickly across the US thanks to the winds. The list of affected regions from Bitcoin mining air pollution particles includes New York City, the Houston, Austin, essentially metropolitan area, Northeast Texas, and areas on the Illinois-Kentucky border. The study was led by Dr. Francisco of Harvard University, Chan School of Public Health. Researchers found that Bitcoin mining essentially often causes an increase in electricity generation and essentially from fossil fuels fired by power plants. Experts analyzed data from 34 of the largest mining centers, Bitcoin mining centers, inside the United States, and concluded that mining in one state has the potential to essentially increase the loads on power plants in another state, thereby spreading pollution. For example, electricity consumption by essentially mining essentially farms in North Carolina caused an increase of coal-fired power plant capacities in Kentucky, which ultimately worsened air quality in Illinois. Meanwhile, Illinois residents cannot directly affect either the mining farm or the power plants. Since the pollution is not occurring in the state where the effects are being felt, there is a regulatory gap. One of the study's authors, Dr. Scott, said there is a number of policies mechanisms that can mitigate essentially in the air pollution. However, he said that this requires action at the federal level. The experts suggested that the U.S. Environmental Protection Agency, the EPA, should adopt a rule regarding fine particle air pollution. Such regulations will require essentially a grid-connected states to more actively control power plant emissions. Programs could also be launched to encourage cryptocurrencies and data centers to locate in new, safer essentially locations, taking into account the impact on public health. It is important to note that the activity of Bitcoin miners is growing, and this can be seen in the BTC network hash rate indicators, that in total computing power of all the devices in this blockchain, last night it exceeded essentially of levels of 1,100 hashes per second for the first time in history. So a few doctors from Harvard came together, conducted a study test with 34 essentially Bitcoin mining centers using power plant essentially energy. And then they realized that Bitcoin mining produces air pollution by creating some sort of particles because the amount of pressure is putting on power plants. And that this 1.9 million Americans are technically affected by air particles created by Bitcoin mining. What's interesting is in the past, they would have said, they're going to shut down the Bitcoin mining, essentially farms and so on. Now, different scenario. They're saying essentially, they can move the Bitcoin mining to much more safer, essentially, locations away from humans so that, the American citizens are not affected by air pollution or particles produced by Bitcoin mining. So times have changed. In the past, the Greenpeace Party would have tried to sue Bitcoin corporations, try to essentially shut them down in some sort of a way. Now they're trying to say, let's just locate Bitcoin miners somewhere else where no people are around them, and it's just safer for the American citizens instead. But first time in my life I've ever heard Bitcoin mining creates particles in the air that if humans can essentially intake, it's bad for them, and that 1.9 million Americans are affected by Bitcoin particles. First time I've ever heard this. Now, I've heard everything from the Greenpeace Party in terms of Bitcoin mining. It's bad for the, it's bad for the air. It's bad for heating up the planet and so on. Not about particles. Even though Bitcoin mining causes particle intake, Japan couldn't care less by the looks of it. A Japanese firm by the name of Metaplanet, which I've discussed many times, especially the day one when Metaplanet decided to follow the exact same footsteps that essentially MicroStrategy has left behind, the blueprint they've left behind regarding Bitcoin mining, regarding essentially buying Bitcoin and putting essentially their company's portfolios, Metaplanet couldn't care less about this whole Bitcoin particle air situation because they've just added another tremendous amount of Bitcoin to their portfolio. Their essentially recent purchase is 4,525 Bitcoins enters essentially into this company. Metaplanet, essentially a Japanese technology company, has acquired an additional their altogether portfolio is 4,525. They've acquired another 319 Bitcoins at an average price of 83,147 per coin. This recent purchase has propelled the company into the rankings of the top 10 largest public Bitcoin holders globally. The company's total Bitcoin holdings now stands at 4,525 Bitcoins. These holdings represent an aggregate cost of basics of $408.1 million with an average essentially acquisition price of $90,194 per Bitcoin. This acquisition is a part of Metaplanet's essentially Bitcoin treasury operation strategy that began essentially in December 2024. The company's approach aims to use digital assets as a way to enhance their value for its shareholders. Metaplanet has set essentially ambitious goals for its Bitcoin holdings, planning to reach 10,000 Bitcoins by the end of essentially 2025 and 21,000 Bitcoins by the end of 2026. The firm's rapid accumulation shows this commitment to this strategy as essentially their holdings grew from just 141 Bitcoins in June 2024 to over 4,500 Bitcoins now. Metaplanet measures essentially its performance through what it calls essentially a Bitcoin yield, which tracks their growth of Bitcoin holdings relative essentially to their shares outstanding. For the first quarter of 2025, the company reported a BTC yield of 95.6% with a year-to-date figure of 6.5% as of April 14th. The company's Bitcoin acquisitions are funded through various capital market activities. These include essentially bond issuance and stock acquisition rights, which allow Metaplanet to raise substantial amounts of funds while keeping essentially their share dilution to a minimum. Currently, approximately 41.7% of Metaplanet's 210 million plan has been completed. This strategy appears to position the company for a continued expansion of its Bitcoin treasury in the coming months. So Metaplanet is aiming for essentially 10,000 Bitcoins by the end, minimum 10,000 Bitcoins by the end of 2025. They want to become Japan's biggest essentially public company holder of Bitcoin. And by 2026, they're aiming for roughly about 21,000 Bitcoins. But as you can see, some countries are talking about how Bitcoin is creating air particles, while other countries couldn't care less. And it just shows you that, money's money. Now, Circle is what we're going to talk about next. Europe is quite big on the idea that they need to have a footprint inside of this digital world, that they want to have a euro stablecoin essentially moving forward. And they, not that they don't want to use essentially a digital dollar equivalent, like a digital dollar stablecoin, like essentially USDT or so, but they're not going to be using USDT because it's banned, but essentially USDC or so on. But that Europe wants their own equivalent inside the crypto market space. They want to have their own equivalent stablecoin. And it is showing that Europe is standing by that. For example, Circle's EuroC stablecoin has surged 43% to record supply as dollar troubles fuel demand. EuroC supply grew 43% over the past month to 217 million tokens worth $246 million. Now, you might think that's not, incredible because, USDT is sitting at billions of dollars in market capitalization, and this one's only sitting at essentially $246 million. It is, once you look at the numbers, essentially, ranking above Paxos's global dollar USDG, and essentially below Ripple's RLUSD by market capitalization. Real world assets essentially XYZ data also shows that most of the EuroC's tokens circulates on the Ethereum network, up to 35% in a month to $112 million, while Solana saw the fastest 75% expansion to 70 million tokens. Coinbase Ethereum Layer 2 also saw 30% growth to essentially 30 million EuroC supply. The token has also essentially experienced an uptick in the chain activity with active essentially addresses raising 66% to 22,000 essentially wallet addresses that are holding essentially EuroC, and a monthly essentially transfer volume surpassing $2.5 billion, up 47% in a month. Euro C, the equivalent essentially USDT or USDC or so on in the crypto market space, is up tremendous, 47% in a month, surpassing $2.5 billion in terms of volume. It definitely should 66% in terms of up by wallet addresses holding essentially Euro C. Euro C essentially is currently the largest euro stablecoin on the market space in general, but it lags far behind obviously its dollar-dominated essentially counterparts. Dollar-pegged stablecoins make up 99% of the rapidly evolving and growing stablecoin market space, led by Circle's $58 billion worth of USDC and their rival Tether with $143 billion USDT tokens. The accelerating growth of Euro C could be signs of growing demand for diversification in euro-dominated digital assets also, particularly as global investors navigate the increasing essentially economic uncertainties in the US with Trump's administration, wild-scale tariffs rollouts, and the greenback weakened 9% against the euros since the start of this year. Expo Bank, essentially a Gibraltar-based bank focused on financial services firms, reported today a 50% increase in euro deposit volumes during the first quarter, essentially outpacing the 20% rise in USDC stablecoin deposits. Meanwhile, deposits in USDT declined by the data that's shown from this Gibraltar bank by over 13%. Has declined in terms of USDT, but 50% increase in terms of euros coming in. This rapid essentially increase in volume came amidst the mounting concerns of the future of the United States dollar's essentially staying at the top and the threat of the US recession as markets braced for Trump's plan of liberation debt essentially went past already. And the firm said essentially in their reports, stablecoin swap volumes between foreign currencies pairs on essentially Ethereum-based decentralized exchanges also saw to multi-year highs. And last week, essentially dominated by euro-US dollar paired, Blockworks data showed that EuroC has also essentially likely benefited from Tether's withdrawal of its euro-backed stablecoin EuroT, with EU essentially wide MiCA regulations going to effect this year, while a number of exchanges delisted USDT for essentially European users to comply with regulations, including Binance at the end of March. That already happened also. So in terms of euro, it's doing tremendously well. It seems like Europe is genuinely aiming to put their official stamp inside a stablecoin market space as well, and that they obviously like the idea of using essentially USDC or any other equivalent that is regulated to be used under MiCA regulations in Europe. However, they are trying to push forward a euro version of a stablecoin rapidly. You could say 60% rise in terms of wallets. 48% rise in terms of volume. 2.5 essentially billion dollars has been moving in terms of volume just in the past month. It does show why some particular essentially companies, which are going to come towards the end of the live once we get to that news, that are essentially aiming for a euro stablecoin. Now, Solana is what we're going to talk about next. So if you are somebody that is holding Solana, this is good news for you, because Solana ETFs could be launching as soon as next week or this week in Canada. Spot Solana exchange traded funds ETFs are set to launch in Canada this week, according to Bloomberg analyst Eric. Now, Eric, the Bloomberg specialist ETF analyst, has been quite right on the market space. And if his words are correct, Solana is going to be launching tomorrow in Canada in terms of an ETF. Eric has been quite spot on his timelines in terms of the market space when it comes to ETFs. Eric was the first one that mentioned that Bitcoin ETFs were going to happen that particular date in January, where a lot of people essentially said, a Bitcoin ETF is never going to be happening. Eric said it is, according to his sources. He is a Bloomberg essentially ETF specialist analyst. And he said it is going to happen. It's going to happen this particular date in January. And it did happen. Eric was correct. And then when you fast forward to the Ethereum ETF, where a lot of people said it's not going to happen, even Michael Saylor came out and did a live show audience and said it's never going to happen. Bitcoin is the only ETF ever. And Eric came out once again from Bloomberg and said, nope, it is going to happen. It's going to happen this particular date. And it did. And now we have Eric coming out and saying a Solana ETF is coming out tomorrow. So A Solana ETF coming out tomorrow in Canada is essentially what Eric is suggesting. He shared essentially this private client's note from TD Bank, a Canadian financial institution, claiming that Ontario's Securities Commission, OSC, greenlighted asset managers' purposes and essentially Evolve CI and essentially 3IQ to issue ETFs holding Solana. The OSC did not immediately respond to Cointelegraph's request for a comment. Canada does not have a federal securities agency, with its territories and provinces applying their own securities laws. Toronto Securities Exchange is regulated by Ontario's essentially OSC. The ETF are permitted to stake essentially a portion of their Solana holdings for added yield. Eric said, adding that the upcoming listings are essentially our first look at the altcoin race, you could say. The U.S. Securities Exchange Commission, SEC, has acknowledged in America, also on the other side of the pond, in America, they have also acknowledged essentially a multitude of ETFs holding alternative cryptocurrencies or altcoins, but so far has only approved the spot Bitcoin ETF and the spot Ethereum ETF, even though the SEC has acknowledged them, obviously, with this new administration. Staking is still off limits for US crypto ETFs. Bloomberg's analyst James, who's also essentially par on par with Eric in terms of their predictions, said Ether ETFs could be green-lighted to start staking as soon as May, but the process essentially may take months longer. However, investors' demand for altcoin ETFs may be weaker than for funds holding core cryptocurrency. Catalin, crypto bank Simon, research head, told Cointelegraph in August that there is also this faulty excitement in the market about these ETFs coming, and no one can point to where substantial demand is going to come from. Said essentially back in March, asset manager Volatility Shares launched their first ETFs to track Solana's performance using financial derivatives. Volatility Shares Solana ETF SOLS, is their ticker, has seen a lukewarm reception, attracting only around $5 million in net assets as of April 14th, according to their website. And the FWIW, the two Solana ETFs in the US, which track essentially futures, so not a perfect essentially guinea pig, haven't done much well. Very little essentially in terms of AUM, and the 2x XRP already has more AUM than both the Solana ETFs, and it came out after essentially Solana ETFs. So it does show, if we're going to get ETFs in America happening, so it does show, according to the data, that Canada is going to be launching their essentially first ever Solana ETF, which is impressive news. But it does show on America's perspective as well that if we do have an XRP ETF, it's going to do tremendously well for itself, because the data so far regarding essentially the 2x XRP, essentially similar to an ETF type of scenario that was launched, did tremendously well. However, the equivalent essentially Solana, somewhat of an ETF launched in America, didn't do that well in any sort of a way. And the XRP somewhat ETF launched after the Solana ETF, which generally does show that XRP is going to do tremendously once an actual ETF is launched. Now, also, Eric added that they wouldn't read on, essentially ton into it as the predictor for spot Solana ETFs and so on. Let's see what's going to happen in general. But Canada is about to be having its own, essentially, Solana ETF, which, if you're holding, essentially, Solana, if you're somebody that's holding Solana, that could play out good depending on how much capital is going to be influencing the Solana Canadian ETF. So let's just see what happens from tomorrow to the afternoon that essentially Solana ETF is launched. Now, regarding the topic of the SEC or ETFs in general, the SEC has delayed decisions on in-kind redemptions in terms of an ETF staking for Ethereum. So all the applicants, essentially pretty much for the Ethereum ETFs, have reapplied to add staking capabilities to their Ethereum ETFs, which I said, something like this is going to happen in the future, because when the Ethereum ETFs were first launched, I said to everyone, staking is not on the table because Gary Gensler sees that as a security option. And therefore, when Ethereum ETFs get launched, they probably wouldn't do as well, essentially, as Bitcoin ETFs will do, because Ethereum ETFs have nothing to offer. And I said, when the time comes, every single ETF essentially for Ethereum that was applied, they're all going to reapply and add staking capabilities, which they have done. But the SEC has decided to delay that decision. if they're going to add staking capabilities or not. The Securities and Exchange Commission, SEC, is not yet ready to make a decision on two critical features that issuers on the spot crypto exchange, essentially ETF market space, are hoping to add to their products. The regulator delayed decisions on whether to allow an in-kind redemption for Wisdom Tree's Bitcoin Fund, BTCW, and Van Eck's Bitcoin Fund, BITB, and Ethereum's essentially staking capabilities. It also moved its deadline for a decision regarding the proposal for the Grayscale to allow staking in its Ethereum trust and mini Ethereum trust, which the Asset Managers Exchange, in terms of the New York Stock Exchange, ACRA, had requested back in February. Now, the Chicago Exchange, essentially that is associated with 5 other essentially issuers of Ethereum ETFs, including Fidelity, Franklin Templeton, Van Eck, and Invesco and Galaxy, submitted essentially their amendments of filing back in March for Fidelity's Ethereum fund and Franklin Templeton's essentially ETF to have staking capabilities. All of that is now pushed in terms of deadline. The SEC has not previously allowed staking in spot Ethereum ETFs, but with this new appointee of the SEC, essentially Paul Atkins, who was confirmed by the Senate last week, things could change quickly. I do believe pretty much Mark might just be waiting for essentially now, preferably now, for Paul Atkins just to step in. But beforehand, Mark has, in my opinion, done tremendous work dropping these crypto cases like a domino effect back to back. Several other jurisdictions, including Hong Kong, Canada, and Europe, have already essentially green-lighted staking for ETFs, but that doesn't put much pressure on the SEC, said one expert. The SEC will take their time and move as fast as or slow as they want, said James, the ETF analyst specialist from Bloomberg Intelligence. He said they don't care what other regulators are doing. In my experience, they might learn from them, but I don't think a regulator is essentially approving something is going to make the SEC jump through hoops and catch up. They'll go at their own pace in terms of if they're going to add staking capabilities or not. The regulator now has until June 3rd to make a decision on an in-kind redemption in terms of Bitwise and Wisdom Tree's products, and June 1st to decide on Grayscale's staking proposal. So Ethereum could have staking proposals by June 1st, essentially. And if that does happen, if Ethereum does get staking as an option when it comes to their ETF, it could help quite a bit of capital entering towards Ethereum ETFs, because then investors, especially high-profile investors, you can say on Wall Street, would see Ethereum as, a viable option to diversify their portfolio with, because they could go for an Ethereum ETF and use it for staking to earn rewards on it. But now, obviously, Ethereum ETFs don't seem appealing in any sort of way. They haven't since they launched. That's why we never saw tremendous price movement for Ethereum when ETFs happened, because Bitcoin has a limited supply, and that's the appeal of Bitcoin. Ethereum, just to a normal investor with a lot of money, seemed just like a bigger version of essentially Bitcoin with just a lot more tokens and nothing else. And it didn't do too well for itself. But if they add staking capabilities, it could add quite a lot of capital to Ethereum ETFs, because investors, high-profile investors, love the idea of making more money. Now, investment giant JP Morgan is what we're going to talk about next. But before we talk about essentially the investment giant JP Morgan on their next movement inside the blockchain space, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or statements to make, put it down inside the comment section. More than happy to answer any questions you may have. So let's go inside the comment section first, and then we go straight in next into the JP Morgan giant news of announcement of their blockchain. So let's see where we were at. We were at here. Evening, Miles and family. Ian, good to see you. How you doing? How you been? Hope everyone had a great weekend. Let's go, Ian. SS says China controls miners, Bitcoin miners. Yeah, I agree. Let's go. Let's go, Metaplanet. Let's go, Ian. Good day, Miles and CMF. Mike, good to see you. How you doing? How you been? And that's about it, because everyone else is having conversations in the comment section. Now, investment giant JP Morgan announces it will allow opening blockchain deposits accounts in this currency. So it seems like JP Morgan is about to be expanding its range in terms of their blockchain project Onyx, which, by the way, I just want to mention, nobody from the retail section can buy Onyx token. Now, there is a particular token on CMC with the same ticker Onyx that is not JP Morgan's token. It was never JP Morgan's token. And JP Morgan has expanded its blockchain-based essentially payment offerings with the launch of Great British Pounds. The Great British Pounds essentially is coming to JP Morgan's Onyx blockchain. The move expands the bank's real-time payment capabilities beyond its current euro and only US dollar offerings, positioning essentially Kinos and their essentially blockchain as a major player in blockchain-enabled corporate finance space. In a statement shared today, JP Morgan said the new service allows clients to conduct cross-border transactions 24/7 with a demand access to funds, weekend processing, and same-day foreign exchange FX settlements. These features aim to increase efficiency, flexibility, and speed for global, essentially, businesses. The new Great British dominated blockchain accounts enable customers to conduct seamless cross-border transactions, including 24/7 currency exchanges, JP Morgan said. With the launch of Great British Pounds, JP Morgan's clients will now be able to move money between Great British Pounds, Euros, and USD, and essentially US dollars, instantly and around the clock, removing the constraints of traditional banking hours. The London Stock Exchange Group swap agent and global commodities trading giant and Trafalgar were the first clients to adopt these new accounts from JP Morgan. The swap agent is incorporating blockchain deposit accounts into a pilot for digital post-trade essentially services. Integrating Kinos innovation digital payments into swap agent can enable us to operate beyond traditional essentially branch closing hours, said Nathan, the CEO of essentially swap agent. Trafalgar will also use Great British Pounds blockchain accounts to facilitate a real-time payments between global hubs in London, New York, and Singapore. So JP Morgan essentially deciding to expand their range, moving, just from the dollar essentially started off with, then euros, now Great British Pounds. It does seem like JP Morgan is trying to compete with other financial tools around the world inside the crypto space. Would also give you some indications of maybe why some projects had to jump through hurdles inside the financial sector so that companies like banks like JP Morgan can propel a lot more faster rate. But the downside of JP Morgan is that it does use Ethereum, and time will tell if that's going to be a brilliant idea or not. Now, Nevada. Sorry, not Nevada. NVIDIA. Nevada. NVIDIA has allocated $500 billion for US AI supercomputers. So a lot of people have doubted essentially Trump's plans in terms of, this tariff battle he has going on. But I've said, and I've stand by it as well, tariffs need to happen. What Trump is doing is actually going to be a positive for the entire market space and for America's market space later on. Obviously, it's going to be jumping through hurdles now and so on, but later on it's going to do a lot more better for the market space. But it does show that tariff battles are working in terms of that, because Apple, for example, investing $500 billion in America's economy, and then you have essentially NVIDIA doing the exact same thing, and a lot more other companies, which I read out on this live a few nights ago, essentially on this live last week, essentially what I read out a list of companies that are moving their manufacturers to the US. So NVIDIA has essentially announced a $500 billion investment to build AI supercomputers in the United States, a move disclosed aimed escalating trade tensions between the United States and China. The only country that is not backing down during this trade war battle is China. China said, no matter what, they're going to pretty much stand by the sword, you could say. A BBC reporter did an interview with China, and for the first time ever, the BBC was not acting liberal as they usually do. The BBC reporter actually backed Trump, which was a surprise to see, but a good surprise to see, my point of view, that, a BBC reporter is backing Trump, for instance. But a BBC reporter asked the question on live news to a embassy member of China and from Chinese government and said, during this tariff battle, do you think China is going to win, essentially, because China is the weaker country? Now, why is this important is because in the past, BBC would have acted liberal and said, essentially China could win this. The same way the BBC said Ukraine could win against Russia. It was never going to be possible, never is going to be possible in general. But the BBC essentially said to this Chinese government member on live news, China is the weaker country in this equation. Do you actually think they're going to win in any sort of way? And the Chinese government member, essentially parliament member, said he couldn't care less. He said they don't care whatsoever. China has existed before America was essentially even created. China is going to still stand strong no matter after essentially America collapses and so on. And that's the view China has. They actually believe for a second that they can win against the United States in terms of a trade battle. But China said, no matter what the battle is going to be, if it's going to be a trade war or a war or anything, China is going to stand its ground. So China, by the looks of it, is not going to be backing down at all, by the looks of it, which could end very bad for their economy. Very bad. Now, the only reason China would even, for instance, think, there's two reasons, in my point of view, why China, isn't backing down. Only two reasons come to mind for me. It's either one, China has something up their sleeve. And by that, I mean they have some sort of hand in some parts of America, which they know that they can control some sort of movements. So in other words, a trick up their sleeve. And the second one is they just really couldn't care less. They're willing to collapse their economy to go up against the US, just so they don't have to bend the knee for Trump. That's the only way that comes to mind. Either China has something up their sleeve, they have some sort of control over something. It could be politicians, it could be senators, it could be governors, it could be companies in America. I mean, recently it came out that essentially Facebook has ties with the Chinese government, where Mark Zuckerberg is now being investigated in some sort of a way because apparently he's been sharing American data, you could say, with Chinese governments, which is interesting to see because they were getting on TikTok's case. The American government was getting on TikTok's case, but the Biden administration was, because TikTok is TikTok is sharing data with China and so on. But on the sidelines, Facebook Meta was also apparently, once it does get confirmed in some sort of a way, according to a member of Facebook that used to work, as a board member, I think she was in Facebook, that Facebook has shared Chinese user data with China's government. But if Chinese users are also communicating with American users data was also sold to the Chinese government. So that's the two things that comes to mind. Not the whole Facebook scenario, but just adding that in. But the only two things that come to mind of why China doesn't want to back down is either China has something up its sleeve. In other words, they have some control of senators, companies, or so on in America, and therefore they think that's going to help them to give that edge on America in the long run. Or two, they really couldn't care less, and they're willing to collapse their own economy, just so they don't have to bend the knee for Trump. That's the two things that comes to mind, because politics is a very cruel game, and a lot of people don't understand how politics works. People like to pretend how they know politics works, but it's a very cruel game. So, and China has been caught out in the past for funding certain politicians. Iran's government has also been found in the past for funding American politicians. There's been American politicians that have been found guilty of being funded by Iranian government. There's been American politicians that have been funded and essentially found guilty by, they've been funded by Chinese governments. Same goes in Europe. A lot of European politicians, even British politicians, have been found guilty of being funded by the opposition countries. So regarding politics, that's nothing new. Government members, senators, even there's a person in the Pentagon. There was a lady in the Pentagon, and she was being funded by the Iranian government. So in terms of government members being funded by opposition countries, it's nothing new, and it happens all the time. So is that why China thinks they have the upper hand? Because maybe they have someone or some groups of people higher up in the US government, and they're getting some sort of information, or they have some sort of control somewhere in America, and that's why they think they're going to have the last laugh? The good thing is, Trump is the president of the United States. But let's just see how this thing essentially is going to play out. But those are the two things that do come to mind for me. Is one, they have some sort of hand somewhere in America, and two, they're just not willing to essentially bend the knee in general. They're willing to collapse their own economy on that basis. But going back to this, essentially regarding Nvidia essentially investing $500 billion in America, and it's all because of this US and China trade tensions that are going on. And it shows that Trump's tariffs are working, because Nvidia is willing to build a manufacturing factory in America rather than going to China, which they normally would have done in some sort of way in the past. This significant investment highlights Nvidia's commitment to advancing AI technology and maintaining a competitive edge in the global tech market while navigating essentially geopolitical challenges. Nvidia has pledged to invest $500 billion in AI supercomputers in the United States, reinforcing its position as a leader in AI technology. This move comes aimed at raising trade tensions between the US and China. The investment includes building advanced AI infrastructure to enhance computing power, is part of essentially Nvidia's broader strategy to strengthen its AI developments, particularly in the regions with favorable regulatory environments. Industry experts view this investment as a strategic maneuver to solidify Nvidia's essentially market position. The financial implications are vast and potentially boosting essentially US tech innovations and AI capabilities. Nvidia's decision may prompt other tech giants to commit essentially to similar actions. This move could influence regulatory frameworks and set a new benchmark for technological advancements in AI. Jensen, the CEO of Nvidia, emphasized the importance of localizing AI supply chains. He said in his own words, "The engines of the world's AI infrastructure are being built in the United States for the first time. American manufacturing helps us better meet the incredible and growing demand for AI chips and supercomputers. It strengthens our supply chain and boosts our resilience inside the market space." Previous statements in AI by major companies have propelled this ambition, essentially often resulting in significant technological strides. Nvidia's hefty investment recalls similar strategic expansions in tech industries. Experts from essentially are suggesting that the implications of Nvidia's investment could reshape AI's technological landscape. Historical trends indicate that such investments often lead to accelerated developments and market competition. And Nvidia is not the only one that's invested $500 billion. Apple also invested similar amounts. SoftBank has also invested around about $100 billion, which is a Japanese bank essentially, SoftBank invests into a lot of things around the world, but they're investing $100 billion in America. There's a lot of investments heading towards America, even though CNBC or NBC News or The View or any other liberal news channel is telling the world that nobody's doing deals with America. Everybody hates America. Nobody's doing deals with Trump. There's actually quite a lot of deals on the table and quite a lot of countries lining up essentially to build that relationship once again with the United States, because they have come to the conclusion, for example, Europe has come to the conclusion that they were essentially abusing their ally, which is America. It's not America that's bullying the world. It's actually being other countries that have been bullying the world in terms of milking America, where America will hand out millions to billions of dollars to these nations, and then these nations would, instead of essentially accepting American products, they would tariff American products so that their own citizens would not go towards American products and rather just go to their own essentially products, or they wouldn't get the same amount coming. So if America is getting a tremendous amount of, let's say, wine or food products or agriculture from France, France is not getting the same equivalent back from America, which it's bad for America's business in general. Now, Kraken is what we talk about next. I've been talking a while regarding the crypto market space is starting to show signs of maturing. The crypto space is maturing. It's standing resilient according essentially against all these crypto movements that are happening. This recent one regarding the OM situation, it didn't send shockwaves inside the crypto space. Or Anchorage Bank Digital is being investigated now. That didn't send shockwaves for the crypto space either. And it does show the crypto space is maturing and is becoming more resilient to bad news, which is a brilliant thing to see. Regarding that, Kraken essentially has announced the launch of their stock ETF trading and their IPO soon to be. These are signs of essentially the blockchain space in terms of Kraken, or even crypto.com is launching something similar. And a few other exchanges are also OKX, Binance, they're all creating departments for institutions in their platforms. So, Binance, Kraken, OKX, Crypto.com, Uphold, or whatever, all these exchanges have always essentially just catered to the retail section of the crypto space. Now they're all starting to cater to the institutional section of the crypto space, because the next clientele entering the crypto space are institutions, which is another sign that the crypto space is maturing. Why are they entering? Because we're in the stage of regulations. Kraken has launched stock and ETF trading, enhancing its trading services beyond cryptocurrency markets, essentially. This move positions Kraken to compete directly in traditional financial sectors, potentially increasing market competition and offering new opportunities for investors. Kraken essentially announced the launch of their stock and ETF trading, diversifying its offerings. This expansion is seen by some analysts as a significant step in broadening their user base and revenue streams. Empowering users beyond cryptocurrencies, Kraken aims to facilitate more diversified portfolios. This follows growing demands for more expensive trading options from their user bases, reflecting a strong move in industry trends, preferably essentially towards the institutional sector. The announcement has sparked interest in the market as Kraken offers traditional financial instruments alongside digital assets. This may essentially prompt increased scrutiny from regulatory bodies as financial boundaries expand. Financial experts anticipate new investment avenues for institutional investors. With broader interest in traditional and digital assets, market dynamics may shift as Kraken introduces competitive pricing strategies. Unlike essentially previous trends focusing solely on digital currencies, Kraken's move aligns with other essential exchanges expanding into traditional finance. This evolution creates an ecosystem akin to hybrid finance models seen in early expansion efforts. Do you know what this also tells you? How close we are getting to tokenized stock markets. You see, the stock market in general, the New York Stock Exchange has talked about it here and there, about essentially going 24/7 Monday to Friday. They've talked about going 24 hours Monday to Friday. They've even talked about going 24/7 in general. The New York Stock Exchange has talked about that topic of 24/7, or essentially Monday to Friday 24-hour market spaces, which are all indications of, one, they're trying to compete with the crypto market space, and two, how close we are to tokenization when it comes to the stock market. And if we have platforms like Kraken or Binance or OKX Exchange or Crypto.com all offering the same thing Kraken is about to be offering, which is essentially, bringing stocks and essentially derivatives and ETFs to platforms like Kraken, it could make it much more simpler later on to make those stocks tokenized on Kraken, Binance, OKX Exchange, Crypto.com, Uphold, and so on. These are all signs of how close we are getting to that, in their own words, a hybrid finance model. Experts predict that if successful, Kraken's strategy could incentivize other crypto exchanges to offer similar services. This could lead to more essentially integrated financial market spaces, as seen in the past essentially sector ventures. Expanding into equities is a natural step for us and paves the way for the tokenization of assets. The future of trading is borderless, always on, and built on crypto relays. And who said this? The co-founder and CEO of Kraken Exchange. These are indications of how close we are to tokenization inside the stock market. That is tremendously big news. It's also an indication of how close we are to regulations inside the market space, which is also tremendous news. Because the closer we get to regulations, what's next? Utility. And when utility happens, do you know what's going to happen next? Decoupling from Bitcoin. A lot of crypto projects, all those contracts those crypto projects did in the past 2 years, 3 years, 4 years, 5 years, 6 years, 7 years, all those signings they did, the testings they did, all those contracts are going to one by one turn on after regulations and decoupling starts to happen. All these are big news and the indication of how close we are to that matter. On the topic of, essentially the traditional financial space entering a hybrid model financial system, Wells Fargo is ramping up its tech banking push with the biggest talent investment in 2 decades. Wells Fargo has just made the announcement that essentially they're going to push further into this digital world, essentially where we're heading, this tech world we're heading, because they're actually employing tech employees for this new world that we're heading towards. Wells Fargo and Co., an American multinational financial services company, is planning to make its largest investment in tech banking talent in over 20 years. According to essentially Harper, who leads the team from Wells Fargo, the firm aims to increase its workforce to roughly 10 more bankers to its tech team this year, after adding roughly 20 essentially in 2024. This move essentially marks a significant milestone for Wells Fargo, reflecting its deepening focus on technology clients and expanding its role in the sector. In their own words, they said, "This is the largest investment in our technology banking team since we launched it more than 2 decades ago," said Harper. He also said, "We've been quietly growing as we attract relationships and we'll continue to invest in this space." The tech essentially banking expansion comes as Wells Fargo overhauls its commercial banking business, accounting for about 15% of its net revenue. Furthermore, besides essentially lending to tech companies in various ways, such as financing secured by software's essentially receivables, Wells Fargo also seeks the practice in M&A debt and equity, essentially capital market transactions, and equity investments in tech companies. These are all indications of where we are standing right now, how close we're to regulations. For example, the 2023 regional banking crisis sparked a significant disruption in US tech banking, as companies rushed to relocate their funds, essentially following the collapse of key players back in 2023 regarding Silicon Valley Bank and First Republican Bank. In the meantime, Wells Fargo is concentrated on supporting its current customers while taking a cautious approach to forming new partnerships, and doing so strictly as possible, said Division Executive Tom Harper from Wells Fargo. In addition, Tom said they had been essentially gradually growing as they made those connections inside its digital world. He said that this would also mean maintaining investment in this sector and converting essentially prospects of clients to a relationship clients. 5 years ago, the company established a specialized industry group within commercial banks, designated industry specialists to provide loans to middle market companies in 11 different segments. In January 2024, Mary Catherine was appointed the specialized industry group leader, and Tom Harper, reported to her. Afterwards, the position was promoted to the point where essentially Mary now answered directly to commercial banking CEO Kyle. Harper highlighted that the strategy aimed to better align Wells Fargo's commercial bankers with personnel and assets across other functions, including wealth management, investment banking, and treasury management. For example, he collaborated closely with Jerry, the head of technology and investment banking, specializing in mergers and acquisitions, advisory, and capital markets. In the technology sector, apart from essentially Wells Fargo lending from its balance sheets in several ways and seeking to participate in M&A debt and essentially equity capital markets transactions, essentially in terms of Harper mentioned that the bank was also a limited partner in the venture and growth, essentially equity investments from Northwest Venture Partners, and made equity investments in tech companies that offer products that would benefit Wells Fargo in the future. So Wells Fargo has been throwing investments here and there in the tech industry to get more involved in its digital future, to just be very silent with their essentially money throwing. Despite this, Wells Fargo remains under asset cap, banning essentially it from growing assets beyond its 2017 size of about $1.95 trillion. Meanwhile, following this, essentially his appointee as CEO in October 2019, Charlie, from some essential sectors like mortgages, pushed for expansion, others like credit cards and investment banking to address their growth. As a result, Wells Fargo's total commercial loans increased from $503.4 billion at the end of 2017 to $540.7 billion in the first quarter of 2025. However, over the same period, its consumer loans, which faced the greatest regulatory challenges in sectors like home and auto lending, decreased from $453.4 billion to $373.1 billion. They're still in the $1 trillion in terms of company, such as corporation movements. But even Wells Fargo right now has made some sort of announcements that they're entering more inside the digital sector. And This is the first time they're doing some sort of a large investment inside a digital space, and that it's over 2 decades. Essentially, their next move is pretty much after over 2 decades. They're about to do some heavy movements inside the blockchain space. So it's definitely something to keep everybody's eyes on in terms of what Wells Fargo's next moves are going to be. And obviously, I'll always be updating everybody during this live, Monday to Friday, regarding if any other news is around Wells Fargo. But before we go through the next news, which is regarding the International Monetary Fund, let's go inside the comment section first. But again, just want to point out Wells Fargo entering the blockchain space in some sort of a way in terms of increasing their essentially tech department, trying to get more access, trying to invest more money inside the digital world that we're heading towards. And they said they're going to use some of that as their partnerships going forward. This is tremendous news. This is huge news for the crypto space. It also shows another way of how the crypto space is maturing, which is what we love to see. The more the crypto space matures, the more of an indication that there is going to be that we're heading towards regulations. Regulations means capital is going to influence our crypto space, because then it's a regulated market space. And essentially when that's happening, at the same time, it's going to be decoupling because of utility. All of that is all positive. Every single bit of that is positive news. Now, the IMF is what we're going to talk about next. But before we talk about the International Monetary Fund, let's go to the comment section first. As I said previously, this is live that you're watching right now, which means if you do have any questions, put it down in the comment section or statements to make. So let's go to the comment section first, and then we go straight into the JP Morgan news. Let's see where we were at. We were at here. Sean, hi. How you doing? John says, what exactly will regulate when? I'm guessing you're trying to say when exactly will regulations be. John, when are regulations exactly going to be? Well, this year in general. They have to be. Some. The ones that we need, to be fairly honest. Because senators, as I said previously, senators, the White House, SEC, CFTC, governors, they're all coming together just for the crypto space, trying to pass the regulations through. This year in general. In my point of view, some this year, the rest next year. But quarter 3 and quarter 4 is when we're going to see those regulations happening. Even Miles, how you doing, Susie? Good to see you. How you doing? How you been? Now, the International Monetary Fund has came out and decided to say that Trump is triggering a global recession. So the International Monetary Fund, which is notoriously known for being honest, just joking. The International Monetary Fund, notoriously known for bullying countries, giving them money, but also bullying countries as they go along, has decided to come out and say that Donald Trump, the International Monetary Fund is going after Donald Trump and warns he's triggering a global recession, which is a lot of BS. Look, even the people around Trump have said, even if people don't want to take Trump's words for it, because some people assume Trump is a moron for some reason, even though Trump is a very, very successful businessman. But then some people also say Trump has, essentially bankrupted himself 6 or 7 times. Trump could have bankrupted himself 20 times. He's still a billionaire, and that's all that matters. He still has successful companies, full stop, is what I would say to that. But the International Monetary Fund is spewing lies on essentially Trump right now. And in their words, it's because Trump is going to cause recessions and global warnings and so on and so on. My words, I see something else. It's because Trump is against the idea of CBDCs, and the International Monetary Fund is big on CBDCs right now. But also because Trump is defunding a lot of these departments like the WHO and the essentially World Economic Forum, and essentially even, working with the International Monetary Fund. They're trying to essentially distance themselves from a lot of these departments, because all they do is just squeeze money out of the United States and do nothing for them in return. Now, the International Monetary Fund is warning countries about the impending, essentially, global recession, citing US President Donald Trump's tariff strategies and geopolitical indifferences as factors that could destabilize global financial markets. Even Trump's financial advisors, economic essentially advisors, have come out and said that the chances of a recession happening is slim to none pretty much. It's never going to happen in terms of recession. Recessions can happen, but in their eyes, we're not heading towards a recession. They're actually trying to save the United States from going into a recession, because the way the Biden administration left the country and decided to just walk off. In a report released essentially today, the International Monetary Fund cautioned that escalations in geopolitical risk, especially related to trade conflicts, could lead to major and lasting essentially corrections in global asset prices. The global lender noted that recent developments, particularly at the White House tariffs agenda, have introduced a heightened uncertainty that could disrupt macro, essentially financial stability across economies. Just want to point out that the International Monetary Fund is very, very big on China, not so big on Donald Trump. Same goes with the world, essentially same goes with the Bank of International Settlements. The Bank of International Settlements is very, very big on China, not so much on Donald Trump. The International Monetary Fund assessment follows several weeks of volatility in global financial markets. You know, that old saying, no S Sherlock, because obviously tariffs are going to cause volatility, but trying to create this mirage of, volatility is going to lead to the recession is a load of BS. Since President Donald Trump's January 20th inauguration for the second term, the S&P 500 index has fallen more than 10%, which some people could even call corrections inside the market space. Bond markets have experienced several swings on both sides, and gold prices have surged to record highs, which is not really a bad thing if you're somebody that's invested into gold. The World Lenders Spring meeting is scheduled for April 21st. So the International Monetary Fund is doing a meeting April 21st, where Trump's essentially tariff policies are expected to dominate the agenda. Now, per the essentially International Monetary Fund's price movements were more profound on April 2nd, the United States president dubbed Liberation Day when a fresh round of tariffs were essentially announced against imports from several countries. The fund essentially said, the International Monetary Fund said, institutions such as banks, hedge funds, private equity firms, pension funds face elevated risk from large, unpredictable market moves. According to essentially the reports, margin calls, an event that occurs when banks require borrowers to post additional collateral, have seen an uptick that has given hedge funds a run for their money. Earlier this month, following Trump's tariffs announcements, hedge funds experienced several instances of margin calls since the COVID-19 pandemic back in 2020. Major geopolitical risk events can trigger large and persistent corrections in asset prices, generating market volatility that could threaten macro-financial stability, the International Monetary Fund stated. You know what's interesting about the whole American situation on their market space? If Trump doesn't do anything to fix the American market space, then the news will come out and say Trump crashed the market space. Now let's just take the other essentially side. If Trump is trying to fix the American market space, the news will come out and say that Trump is trying to crash the market space. Do you see where I'm going with this? If Trump doesn't do anything and just continues the path that Biden was going on, the path that the media praised Biden for, the media praises Biden. All of Biden's supporters on TikTok and these social media platforms always used to praise Biden, say Biden is fixing the American economy, saving the American economy, even though everything was through the roof, but he was fixing the American economy and so on. If Trump continued on Biden's path of fixing the economy and America crashed, the news would have came out and said Trump crashed the American market because he didn't do his job as a president. If Trump fixes the American market space, they say Trump is trying to crash the market space. No matter what this man does, they're going to criticize him. It's something that a lot of people need to understand. This is why the media is just full of BS. And it reminds me of someone as well who essentially was the king of Iran, the Shah of Iran. The Shah of Iran essentially decided to, do a lot of things. The Shah of Iran, for example, said he's going to lower oil prices. And the media of Iran told the Iranian people that the Shah of Iran, the king of Iran, is trying to sell oil to the West. The Shah of Iran increased prices on oil, and the media came out and said the Shah of Iran is trying to profit a lot. The Shah of Iran celebrated the Persian Empire, and the media told essentially that the Shah of Iran is spending people's money. Everything that man did, the media tried to criticize him as well. Same goes with Trump. Everything Trump does, they try to criticize him. If Trump doesn't do anything which America 100% is guaranteed to go downhill if Trump doesn't do anything about it, then they will say, oh, well, Trump did nothing. Honestly, the news headlines will be, since Trump became president, he did nothing and the American markets crashed. If Trump does something to fix the American market spaces, which tariffs are the solution, by the way, the news comes out and goes, Trump is trying to crush the market space. If he doesn't do anything, it's his fault. If he does something, it's his fault. Imagine being a president now. The report also examined geopolitical threats over the past decade and discussed the US-China trade war under Trump's first term, which essentially it reckoned would add to the recession fears, said the International Monetary Fund. Other geopolitical elements like Russia's invasion of Ukraine were listed as examples by the International Monetary Fund of global market impact events. Still, the fund essentially retreated that Trump's focus on trade in his essentially second term is more aggressive than the POTUS essentially first tenure of the White House. Data shows that the United States has raised tariffs to the highest level in a century, while essentially China has responded in kind. The world's two largest economies are now imposing essentially import levies, essentially exceeding 100% on each other's goods, effectively doubling the price of cross-border products. Such essentially policies, the International Monetary Fund warned, are increasing the difficulty for investors in accurately essentially pricing geopolitical risk. This uncertainty could lead to what it described as sharp market reactions. What the International Monetary Fund is suggesting to do for Trump is to back down. If Trump backs down, America will crash. How does the International Monetary Fund not understand this? And how does basic people who hate Trump don't understand this either? If Trump backs down, the American economy is heading towards a crash, because the way the previous administrations left the American economy, it's standing on its last leg. All Trump is trying to do is build that strong foundation once again. So the International Monetary Fund suggestion is Trump back down and stop going after China. So what happens next? The American economy will slowly be heading into a crash. And once that happens, who do you think wants to take over? China. So who do you think the International Monetary Fund is standing with? China or the US in this scenario? In the statements, the International Monetary Fund Managing Director, Christina, has spoken against Liberation Day, stating that the president's tariffs program clearly represents significant risk, is what the International Monetary Fund said, to the global economy. Like most analysts worried about Trump's tariffs, essentially propounded that the longer-term consequences of taxes will increase the so-called market-tailed risk. These essentially refer to the likelihood of rare but severe portfolio losses, such as essentially during a financial crash. And if the risk essentially grows, she asserted that so does the possibility of a market collapse, is what the International Monetary Fund is coming out again saying. She said the geopolitical tensions and abrupt policies shifts heighten investor anxiety. This can contribute to feedback loops where falling asset prices further erode investor confidence, is amplifying downward pressure on markets, essentially the director added. So the director of the International Monetary Fund said that basically the US just needs to stop all tariffs and let the world continue as it was, which is what? Milking American tax-paying dollars. Because that's how the world was moving in the past, milking the tax-paying dollars. Where Europe was squeezing America for dollars, every country on this planet was squeezing America for dollars. American politicians were squeezing America for dollars, and the only ones that were, essentially during this scenario feeling the repercussions were the American citizens, which some of them were too blind to see that essentially the American politicians couldn't care less about them, and that every country was squeezing money out of American taxpaying dollars, because that's how it was in the past. So according to the International Monetary Fund director, we should just go back to the previous plans and just let Europe, the UK, Australia, Japan, Singapore, Middle Eastern countries, any country just squeeze money out of tax-paying dollars through the US aid, essentially they closed down. Just open up the US aid again and let's just squeeze tax-paying US dollars money to every country, is what the plan is, according to essentially the International Monetary Fund. Stop all tariffs, go back to the previous plan, which is squeeze money out of tax-paying US dollars. Or print more money. And what's that going to cause? America going downhill. She also cautioned nations about the effects of tariffs on sovereign, essentially, debt markets, sovereign risk, essential premiums, which is the cost of credit defaults, swaps that protect against government defaults on rising issues. The yield on the US 10-year, essentially, Treasury notes stood at 4.43% today, after essentially raising steeply last week. Based on the over-the-counter interbank, essentially, quotes for the government bonds maturity, this, the fund said, could spill into other countries through essentially internationally trade and finance channels, particularly emerging markets with higher debt burdens. Meanwhile, a recent survey by the retainers also essentially shows that consumer confidence in America has dropped. No, it hasn't. Why are essentially news channels like the retainers, for example, making up fake articles? The Wall Street Journal is very famously known for making up fake BS. So is the Huffington Post. And so is CNBC, so is NBC News, so is The View. Everyone on that panel is full of BS. Why do they keep on making up fake statements? That they're showing essentially Americans are not showing, essentially businesses are not showing confidence towards America's market space. Is that why SoftBank has invested, a Japanese company has invested $100 billion? And some people say, well, I don't believe SoftBank has invested $100 billion. How about you go to SoftBank's website and see it with your own two eyes? Is that why essentially Apple has invested $500 million? Is that why Apple has invested essentially $500 million? Is that why NVIDIA's new announcement is $500 billion in America? Is that why Toyota is moving manufacturing? Is that why Honda's moving manufacturing? These companies are showing no interest, but they're willing to spend billions of dollars in America. The amount of fake news on essentially Trump's movements is ridiculously funny, is what it is. But again, it goes back to the argument of, if Trump doesn't do anything, then they say Trump was the president of the United States and he didn't do anything and America crashed. If Trump tries to fix the US economy, they say Trump is trying to ruin the American economy. The International Monetary Fund also released an essentially accompanying blog examining the impact of US and China tariffs actions between 2008 and 2024. It found that announcements during that period consistently pushed stock markets lower in both America and Asian East countries. The first time they report something true about them. But in general, the amount of fake BS on essentially Trump's movements is ridiculously crazy. Ridiculously crazy. But it also does show where the International Monetary Fund stand. Because it obviously shows that the International Monetary Fund is not standing with the American people. Because according to the director of the International Monetary Fund, Trump should stop all tariffs and go back to day one. Which would mean US aid would start back up, funding cartoons in the Middle East and spending $20 million for no apparent reason, or spending hundreds of millions of dollars on essentially sporting events in Argentina for no apparent reason. That is, if the money is actually going to these titles that are essentially written on these USA documents. And the US politicians squeezing money out of tax-paying dollars from citizens of America, and countries squeezing money out of America as well. That was the old America. That's the truth about America. That no news channel will like to tell you. Fox News is, as some people might hate it, some people might like it, it's actually the only one during this time that's been reporting genuine news, you could say. Genuinely. Believe it or not, Fox News has been reporting genuine news that you can fact check yourself. Before anybody criticizes Fox News, you can go fact check it yourself. In the past, there were a bit, here and there, a little bit of a hit and miss scenario. But they're actually, essentially showing some genuine news now. But yeah, that was the old America. The old America that nobody wanted to talk, that essentially everybody assumed was doing pretty well for itself. But that was the old America, where your government members were stealing money from you, and also countries were stealing money from you. And the only people that were feeling the repercussions of that were the tax-paying, essentially, US citizens. And they were telling you America's doing great, while the people you elected were stealing from you, and countries around the world were stealing from you as well. And they were telling you it's great. America was doing great back then. No, it wasn't. Now it's actually doing great. Sure, the market's feeling repercussions, but it has to, for that strong foundation to be built. If America goes downhill, China's essentially the next country that's going to take over. And the oldest saying, the grass isn't greener on the other side. Sure, China might look more advanced, because it is. China looks it is more advanced in terms of an economy. It's much more cleaner economy, much more safer economy. It has all these positive factors about it regarding China. It's safer, it's more advanced, it's more reliable. There's a lot of things that are positive about China's economy, in terms of China's country, in other words. But there's also the restrictive side of China, which a lot of people don't know about, which is the government is very, very restrictive. And if one day it does come a day where China is able to take over, that could be in the next decade or the next 2 decades or the next 50 decades, whenever that happens, those restrictive policies could enter your, essentially, countries if they are in charge and they have the most powerful voice. But for the time being, America has the most powerful voice because America is trying to restore that voice. Other than that, I mean, China is doing tremendously well for itself, but their economy is still on the verge of an economic crisis situation in terms of the real estate market space. It is still crippling. But they really want that position. And you can see where, the International Monetary Fund is standing. It's definitely not with the US citizens, because that was the old America. The old America is now done and dusted with. No longer are American citizens' taxpaying dollars being wasted on foreign countries or politicians stealing from it. Now, Europe is what we'll talk about next. Before we talk about Europe, let's go into the comment section first, and then we go straight into Europe's news. So let's see where we're at inside the comment section. We were at here. Scott, good to see how you're doing. Hello, Miles and CMF. I hope that everyone had a good day. Scott, good to see how you're doing, how you've been. Did Ripple purchase some major company? Yes, hidden. It was on last Thursday they purchased it. Doesn't matter what he does, it won't be the right thing. He can't win with them either way. Facts. Absolutely, Shelly. Yeah, facts. Whatever Trump does, honestly, they will try to find a way to criticize him. If Trump doesn't fix America, they say Trump did nothing for America. Trump tries to fix America. They say Trump is trying to crash them. Trump is trying to crash America. Stormy says, yeah, facts, honestly, Shelly. Stormy says, I was just telling my mum the same thing about Fox News being the only newsworthy channel that's telling the truth. Facts, I agree 100%. This is a restream, no? Yep. Now, Euro. Euro stablecoin coming essentially to XRP Ledger. Ripple announcement. So Ripple is doing the Paris blockchain event right now. Europe right now essentially is holding in Paris. There's a blockchain event going right now, and it's Ripple is a part of this blockchain event, the blockchain week that's going on. And Cassie from Ripple's side has come out, which is essentially Cassie is Ripple's managing director for the UK and Europe, has confirmed that a euro-backed stablecoin will be launched on the XRP Ledger, which is it's a major announcement. And from the numbers that I shared previously regarding the Euro C essentially token, that's from essentially Circle, that's had tremendous, essentially 60% in terms of up in terms of wallets holding essentially Euro C's essentially stablecoin, or in terms of the 48% rise and $2.5 billion surpassing in terms of volume just in the past month. It does show that Europe is, essentially trying to dominate the blockchain space, and there's a stablecoin space with a Euro domination. And I think it's a brilliant move for Ripple to be making such an announcement, and that they're going to be launching a version of their own on the XRP Ledger, which is tremendous news. So Casey, essentially the Ripple's managing director for UK and Europe, has confirmed that a euro-backed stablecoin will be launched on the XRP ledger. She made this announcement during Paris Blockchain Week 2025. The stablecoin will be issued by essentially SOC Gen Forge, a digital asset division of the major French bank Societe Generale. The Ripple essentially and so-called Gen Forge first worked together on custody solutions, how digital assets are securely stored. Now they're essentially expanding into stablecoin creations. They said we partnered with essentially Circle Gen Forge initially essentially around custody and now more broadly about Euro CV stablecoin on the XRP ledger. This is a significant move for Ripple, putting the XRP ledger in a strong position next to other essentially blockchain platforms like Ethereum when it comes to regulated stablecoins. It also allows the earlier launch of Ripple's own stablecoin RLUSD, strengthening its XRP ledger role in the global financial systems. Ripple is building essentially a full financial infrastructure using blockchain offering tools for payments, asset custody, and tokenization. Cassie explained that custody solutions are the gateway to everything else in digital essentially assets. You need to get your custody right, and it needs to essentially be bank grade, she emphasized. And that's why Ripple acquired custody technology back in 2023 to support banks and essentially institutions looking to tokenize assets such as money market funds. Cassie also highlights that the MiCA regulations in essentially the EU is encouraging more institutions to explore crypto. The rules giving companies the confidence to operate legally and securely in blockchain spaces. MiCA is helping institutions lean into blockchain and digital asset spaces with confidence, she said. As a result, Ripple is essentially seeing growing demand for its services from banks and traditional financial players. Ripple believes that with the right tools and clear regulations, Europe can become a global leader in digital finance, and Ripple wants to help power that transformation. Amazing news coming out of essentially Ripple regarding launching a Euro version of a stablecoin on the XRP ledger, especially since now that Europe is very, very focused on competing with a dollar stablecoin. A Europe stablecoin on the XRP ledger is brilliant news, because the only other one that is accepted technically under MiCA regulations is the one from essentially Circle, which is the Euro C token. That means that essentially Ripple's new Europe essentially stablecoin will be competing with that, which is amazing news. Honestly, one of the best news that could have come out essentially the Paris Blockchain Week that's happening right now. The announcement just came from Casey, the managing director of Ripple. Also, just one other side note on Ripple. If anybody missed it, when essentially Brad did an interview with essentially CNBC, they talked about essentially the SEC versus Ripple case. And the SEC, essentially the news anchor said on the interview, the news anchor said to Brad, what's happening with the Ripple and essentially SEC case, which is essentially they've come to a joint agreement. The interesting part about that interview was when the news person asked essentially Brad regarding the payment, and Brad said $125 million is in escrow for the SEC, but now the SEC is going to receive only $50 million from the escrow, and the injunction is obviously going to be lifted. And Brad also mentioned that another $50 million is going to be headed towards the US government, possibly in XRP, from that $125 million in escrow. If anybody missed that interview where Brad said this, go back and watch that interview that recently happened with Brad, where he mentioned $50 million goes to the SEC, and he said $50 million is going to the US government from that $125 million in escrow. And he said possibly that $50 million that's going to the US government is going to go in XRP, which would be an indication that that $50 million that's going to go to the US government in XRP is definitely going to go towards the XRP stockpile for the United States of America. And $25 million goes back to Ripple. And on that note, we have come to the endings of tonight's live. If you're watching this for the first time ever, this was the CMF Live, which essentially stands for Crypto Mouse Family. My name is Miles. I host this live that you're watching Monday to Friday. You can tune to this live, so which means you can tune tomorrow. This was episode 298 of the CMF Live. And in this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. We always do Q&As on this live, and the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And in tonight's live, we talked about essentially Europe's stablecoin. We talked about the International Monetary Fund on where they stand. We talked about essentially Wells Fargo essentially entering the blockchain space even further. It shows that the crypto space is maturing. We talked about Kraken also expanding into a hybrid financial system, which again shows the crypto space is expanding and how close we are to tokenization for the crypto space. We talked about NVIDIA allocating $500 billion towards America in terms of manufacturing for AI. We talked about investment giant JP Morgan essentially expanding into Great British Pounds in terms of their blockchain. We talked about the SEC in terms of delayed decisions on essentially ETF applications for staking capabilities for Ethereum. We talked about Solana ETFs launching essentially in Canada this week, preferably essentially going to be happening tomorrow. We talked about essentially Circle's USD stablecoin surging 43% upwards. We talked about essentially the Japanese firm Metaplanet expanding into their Bitcoin holders, now holding roughly 4,525 Bitcoins. We also went through on tonight's live regarding Bitcoin mining fuels air pollution, a new study test that was done by 6 essentially doctors. We also talked about Anchorage Crypto Bank Digital, which essentially is now being essentially probed by Homeland Security in terms of are they committing any sort of fraud. The crypto space is standing strong still, even though this news has come out. We talked about the Fed member Chris Waller with his two predictions in the market space of are we going to have rate cuts or not. We also talked about on tonight's live regarding the OM situation, which it collapsed 90%, and we also talked about the US stock market and the Bitcoin gains and the crypto space and tariffs in general. We talked about a multitude of topics as we always do every single night. This was episode 298 of the CMF Live. Tune in for episode 299 tomorrow. Before we go, let's go to the comment section first, just in case I didn't miss anyone's essentially comments. Let's go, Miles. Let's go, Scott. Good night, Miles, and all the CMF. Thank you for the great live and news. Let's go, JP. See you tomorrow, but at the same time as usual. Thanks, Legend. Much appreciated. Night and day, CMF. Let's go, Shelly. See you tomorrow, same time as usual as well. Night, Miles and CMF. Pablo. See you tomorrow, same time as usual as well. Thanks, Miles. Great live as always. See you tomorrow, same time. See you tomorrow, same time. Autistic as well. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Ian, see you tomorrow, same time as usual as well. I just want to say thank you so much to everyone that essentially tunes in from the CMF every single night. It's good to be back as well, because I did take Friday off, but I'm back Monday to Friday again. Honestly, it's great to be back, CMF, once again, 100%. And also, thank you so much to everybody from the CMF who has liked this live. If you watch us on X, CMF members, if you've liked this live, if you've retweeted this live, put a comment outside the live, hashtag essentially the XRBM, hashtag Trump, hashtag Mega. Thank you so much. If you liked each other's comments as well, thank you so much as well. If you also CMF members watching us on YouTube and you like this live and put a comment outside live as well, thank you so much again. And if you're new and you're watching this live for the first time ever and essentially you enjoy this live, you can tune in tomorrow and essentially any other day, Monday to Friday. And also, if you did follow me during this live or subscribe to me, if you watch us on YouTube and you subscribe, if you watch us on X and you followed me, thank you so much and welcome to the CMF family. I'll be seeing everybody tomorrow, same timing as usual. Congrats on episode 298, Miles, from an OG. Let's go, Scott. Thank you so much, brother. Great job, Miles. Thank you so much, Scott. Thanks, Miles. Good night, all. Stormy, see you tomorrow, same time as usual. I will see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. It's been a while. Ronnie, definitely has. Good to see you. Tune in tomorrow, brother. Ronnie, tune in tomorrow, same time as usual. Scott, see you tomorrow, same time as usual, brother. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF, thanks so much to everyone who liked, retweeted, and commented, and even tuned into this live. See everybody tomorrow, same time as usual. If you followed during this live as well, thanks so much. Welcome to the CMF family. Good night, Miles and friends. Let's go, Scott. Scott, see you tomorrow, same time as usual, brother.